Okay, hello everybody, and welcome to Investing with IBD, sponsored by MarketSmith. Today is April 29th, 2020. I'm your host, Arusha Pierce, and with me today is Jeremie Capron. He is the Director of Research at ROBO Global. Thanks for being here, Jeremie.
Thank you.
On today's podcast, we're going to talk about the current market, and then we're going to get more into robotics and AI. So we'll spend part of the first segment on robotics and AI, and then also the entire second segment. We will end the episode with 3 current stocks. So let's get into it. Let's talk about the current market. And this market is once again, it's a great teacher of how not to rely on what you expect. It's going to do the opposite of what you want. The market is in an uptrend despite all the fears. Leading stocks, a lot of these great growth stocks are in uptrends. They're starting to move higher. Now, remember, we're in earnings season, so there is that huge variable out there. Make sure you know when your stocks are reporting earnings. Jeremie, what are your thoughts on this market?
I think the market reflects the nature of this crisis. That is a temporary, an external event that is more like a natural catastrophe than a typical recession coming after a period of excess. And the policy response has been by far more coordinated and stronger than ever. So, the monetary fiscal policy response is probably in excess of 20% of global GDP. We've never seen anything like that. And so we're not too surprised by the strength of this rebound from the March lows. And on the pandemic side, increasingly, signs of stabilization are coming. We flattened the curve, as the media likes to say, and at Robo, we're very encouraged by what we're seeing in China. It's coming out of the crisis first. We have a lot of investments around Asia. We're paying close attention to China, and industrial activities already recovered to 90% plus of pre-crisis level. So again, I think we should trade this like a natural catastrophe more than a typical recession.
Oh, that's good news. And to share with the listeners, yeah, even our companies in China, from on a larger O'Neill perspective, a lot of our fellow employees over there are back to work in China. So that is definitely good news. Now, Jeremie, you've been doing this for a while, and you've seen a lot of stuff. Why don't you walk us through how you got into investing, how you became an analyst and eventually the director of research at ROBO Global?
Well, as you can tell, I'm not from here. I was born in France, where I studied engineering and finance, and I have a passion for investing that took me to Asia, where I was a research analyst for nearly 10 years, looking at Japan, China, and the rest of Asia. And I've always been interested in technology and in great companies. And so for much of my investment career, I've been looking at automation and as a sell-side analyst, advising portfolio managers around the world in terms of their investments in robotics companies. So that was in Asia first, and then I moved to New York, worked on Wall Street, and expanding my expertise around all forms of automation, not just what's happening in factories and the automation of manufacturing, but all areas where automation has become a game changer. So think about logistics, think about healthcare, the food and agriculture industries, and even software and business process. And that's what led me to ROBO Global.
No, and that's perfect. I mean, you're in the right place at the right time. And so talk a little bit about Robo Global, because it was really interesting once I learned about the company, and you guys have created this ETF really targeted towards this large trend that's happening there. So talk a little bit about the company and your goals there as a firm.
ROBO Global is a research and investment advisory company that is focused on what we believe to be the next technological revolution. and that is robotics, automation, and AI. About 7 years ago, we started the first robotics and automation ETF. Ticker is ROBO, and now we offer a range of research-driven equity portfolios that cover AI and also healthcare technologies. And today there's around 2 billion US dollars in AUM that's tracking our indices and strategies. And it's primarily in ETFs and mutual funds around the world. Uh, the strategies are based on a research-driven selection of best-in-class companies from around the world,
Mhm.
and we combine that research approach with the discipline of index investing and you know a strong ESG policy as well.
Oh, wow.
I think we're a little different from traditional investment managers in the sense that we're not just a group of research analysts and portfolio managers, but we also are fortunate to work with uh, the industry experts that are truly the who's who of the robotics and AI world, from academics to entrepreneurs that help us steer our research efforts in the right direction.
Yeah, no, I mean, it doesn't get much better than that if you get to talk to the experts that are really changing the world. And so you'll get to understand what are the companies that are heavily involved in this, and what are in a lot of times what are the smaller companies that might be building one very specific thing that's critical to the whole process of robotics and AI.
Yes, you're right that there are some very well-known big companies that are at the forefront of this technology revolution, but there is also a host of small and mid-cap companies
Yeah.
that are more narrowly focused on specific areas, and our goal is to provide exposure to the entire value chain of robotics and AI. That means not only the makers of robotic systems for specific applications, but
Yeah.
also the companies that make the core fundamental technologies that make those automated and autonomous systems possible. So think about the sensing, the computer vision,
Yeah.
think about the compute and the machine intelligence, and then think about the actuation, which is how these systems interact with the physical world. So we look at companies in all of these different areas, and of course, the providers of automation solutions for specific business problems. Making a car, assembling an electronic device, a surgical robot, automating a hospital, or
Wow.
robotic, process automation for business applications.
No, that's perfect. So let's talk about this larger and bigger picture that's going around robotics and AI, and just start us off from kind of the bird's eye view, and then throughout the episode we can drill down further and further. So a lot of this started off in manufacturing, right?
Yes, uh, robotics is nothing new. It started in 1960s.
Oh, wow.
The first robotic arm was deployed in a GM plant, uh, uh, and that was in the 1960s. And for a long time, robots were confined to this particular application because they were complicated machines. They were very
Yeah.
expensive and very hard to program. But in the past 10 years or so, we've come a really long way in terms of some of those core enabling technologies that I mentioned before. The sensing has improved, the compute
Hmm.
power has improved. Now we have data centers that can process information at lightning speed. We can deliver the information where we need it and when we need it. We have robust communication networks and so on. And so we're starting to see robots come out of the factory floor and touch every sector of the economy. I mentioned we have robots in hospitals helping surgeons with procedures.
And one of those in the hospital and stuff, right? The surgery is the Da Vinci, right? By Intuitive Surgical. And
That's
that's been around for what now, 15 plus years.
15 years. It took 15 years to now have about 5,000 of
Wow.
those
Wow.
systems
Yeah.
in the field. And now we have, robots in our homes. We
That's
have
true.
robotic vacuum cleaners. We
Yeah.
have, voice-controlled assistants. And I think this is just the tip of the iceberg. You start looking into logistics and how, e-commerce companies are able to deliver goods to you sometimes within hours. All that is thanks to automation. We're seeing some good progress in the food and ag
Okay.
markets. Well,
Yeah.
still in the early days.
Yeah,
But
and walk us through that a little bit, because that's probably because I kind of see, so I've seen some videos on this, but that's something that most of us aren't necessarily aware of, how robotics is affecting the whole food industry.
it's still early days.
Okay.
And I like to say the most mature market is manufacturing, and then in the past 10 years, we've seen logistics automation really come to the fore and
Yeah.
being a big spot. We think the next big sector that's going to be profoundly transformed is healthcare, and food and ag is further down the road. So we're
Oh wow.
seeing
Okay.
precision ag applications. So there's a really interesting company that was acquired by John Deere a little over 18 months ago. That's called Blue River Systems, and they have a facial recognition type of computer vision system that you put on the back of a trailer, and you go over the crops, and then you're able to analyze each plant in terms of the level of hydration, the potential contamination by diseases, and so on.
Oh wow.
This is very
That's
promising.
mind-boggling.
Blue River tells us that we could be able to reduce the use of pesticides by a factor of 10 using that kind of precision technology.
Wow, that is absolutely incredible. So let's take a quick break here, Jeremy. The market is in an uptrend, and remember, we potentially could be starting a new bull market. But earnings season we're in the midst of it. Make sure you know when your stocks are reporting earnings, so you can at least make a decision what to do before earnings. So let's take that quick break. But when we return, we're going to continue this conversation, and we will talk more about how robotics and AI is affecting healthcare. Stay tuned. I am here with Scott St. Clair. Scott's one of our senior product coaches at MarketSmith. Now, Scott, there are a ton of publicly traded stocks. Just on the U.S., I think it's over 5,000 stocks. Who has the time to go through all of these stocks and find the very best ones?
Yeah, most people don't, right? So what you need is a tool like MarketSmith. We have decades of research on what makes a great winning stock. So we've done all the research for you. So we're going to try to highlight those specific stocks with those great data points. So if you're looking for that next great potential big winner, orange stock ideas button, you just click on it and you've got some of the main reports that we use, including the Growth 250.
Yeah, and the Growth 250 is the first list that I go through on the weekends.
Yeah, it's the most popular one, but there are others. There's the Breaking Out Today, Stocks Near a Pivot, and then the Blue Dot list, right, which is very popular. It's going to show you the stocks with the best relative strength. So we've done a lot of the work for you. What you have to do is review these lists. You're going to come up with some of the best ideas in that current market environment.
Perfect. MarketSmith saves you time and makes investment research that much easier. For more information, go to investors.com/podcast2020. Jeremie Capron is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Jeremy, before we get into healthcare, let's first talk about kind of that larger investment opportunity that's going on with robotics and AI, because we're really still early in this whole trend, right?
I think so. We are in the very early days of a technological revolution, and robotics and AI is not a niche. It's a set of uh, it's a set of technologies that can be deployed in any market, any industry, and it's happening now. So I would like to compare that to prior technological revolutions, the most recent one being that of the internet and mobile
Yeah.
over the past 20 years. And when you think about the implications from an investor's perspective, well, the prior technological revolutions have created enormous amounts of wealth. And I think it's important to keep in mind, you go back 20 years, 1997, the internet accounted for 0% of the S&P 500. And fast forward 20 years, and internet companies accounted for more than 10% of the US equity market cap. So I think we're going to see something very similar with robotic and AI. And today, those companies account for less than 3% of the S&P 500 or the All Country World Index. So very early days indeed.
Oh, that's perfect. I mean, and it's really interesting. Sometimes it is hard to grasp how early you might be seeing something, some of these technologies. And the internet is a perfect example, because who would have ever thought? And a lot of times it is the internet involved into mobile, and now it's evolving into the cloud and all this kind of stuff. So let's now go for the robotics AI and how it's applied into healthcare, because obviously that's a huge topic on everyone's mind right now, and the more automation, the more robotics and AI that we can get involved in healthcare, the quicker we can resolve a lot of these diseases that are happening.
Yes. At Robo, we think that after manufacturing and logistics, healthcare is the next big economic sector that's going to be profoundly transformed by these technologies. We're seeing the convergence of robotics, AI, and life sciences create tremendous opportunities for patients, for doctors, and for the healthcare industry in general. In fact, healthcare is today one of the least digitized sectors of the economy.
Right.
And as a result, we've seen a conspicuous lack of productivity gains over the past decade. But we are clearly at an inflection point. If you think about it, we now have, we talked about the Da Vinci robots, 5,000 of those helping surgeons around the world with nearly 1 million procedures a year. We have AI that can help doctors enhance their diagnostics, AI reading medical imagery or blood test results. We have 3D printed implants. We have miniature heart pumps that can be inserted through the femoral artery.
Oh, wow.
We have wearable sensors, cardiac monitoring. We have glucose monitoring. Think about the iWatch and how that's opening up a whole new world of possibilities in terms of monitoring the human body.
Well, and let's stop there for 1 second, Jeremy, because with the glucose monitoring, that's a hot topic, and a really, where, like you said, a lot of innovation going on. For the kind of growth stocks that we look for, a number of those stocks are involved in that. You have Dexcom, Insulet, Tandem Diabetes. Those are the 3 stocks that keep coming on our radar. Tell us a little bit more about what those companies are doing in this part of the field.
Well, diabetes is a huge problem worldwide, with millions of patients having to go through an extremely complex cycle of measuring glucose levels and then using insulin to manage that. It's very difficult. It involves, prickling your finger several times a day. It involves some mental calculations of how to adjust your glucose levels. And so that's a perfect example of where tech can make a huge difference. And companies like Dexcom and Insulet and Abbott, have done really well in terms of bringing to market devices that completely change the lifestyle of diabetes patients. And here again, it's early days, and you can see generation after generation, the products are becoming smaller, and we are now very close to a point where we can have the full glucose insulin cycle automatically managed.
And so they no longer have to prick their finger. Do they have some kind of device attached in them somewhere to measure the blood sugar at that point, and then they can read it on the app?
That's right. You're essentially wearing a patch
Okay.
that includes a glucose monitor. And then in terms of the insulin delivery, we now see also miniature a patch that have a an insulin pump in it. And then you have the software side of that around the
Yeah.
cycle management, and you start to see some really interesting developments around that too, with companies like Livongo
Yes.
coming up on the data side. So
And
we're very
that stock has been doing insanely well over the last couple of months. So they're taking a lot of this healthcare data and organizing in a way that's easy to read. Is that what they're doing? It's just more the data management of it.
Absolutely. It's the data management. And then, you know how consumers have become very intimate with their mobile devices.
Right.
And
Right.
this is a great platform to nudge people toward the right behavior to solve their healthcare problems. So it's not only about the data management, but it's also about introducing some behavioral incentives for patients to take care of their health by themselves.
Wow.
That is very powerful. But Irusha, this is only one of 9 sectors that we've identified as high growth and high earnings potential around healthcare technologies. Uh, let's not forget about what's happening with genomics,
Yes.
because that in itself is a revolution. We now have affordable gene sequencing, which opened the door to detecting diseases at much earlier stage than what we've been able to do before.
And the big leader in the genomic space, identifying the DNA and all that. That's Illumina, right?
Illumina is the dominant force behind bringing the cost of genomic sequencing down.
Okay.
They provide the sequencing machines
Yes.
that power all sorts of genomic approaches.
Okay.
The disease detection, the precision medicine, personalized treatments. There's a whole host of companies going after that as well. But you're right, Illumina is sort of the basic brick that enables that.
Okay. Okay. So what are some of the other companies that are involved in the genomic space? I know. Well, Guardant Health came out public maybe last year, right? And they're doing like the liquid biopsy. Uh,
Yes.
that not maybe they're not really in the genomic health, but that was one that kind of just popped in my head. But what are some of the other genomic younger companies that are coming and attacking this part of the chain?
So on the gene sequencing side, you look at companies like Illumina, of course, but then smaller ones like Pacific Bioscience,
Okay.
or you look at Brooks Automation that acquired GeneWiz. So GeneWiz is now part of a public a company. And then around the early detection of diseases using genomics, you're looking at companies like Exact Sciences that have
Yeah.
colon cancer test that's basically helps you get around the colonoscopy. So
Yeah.
instead of waiting until your cancer is at stage 2 or 3 or worse,
Yeah.
we can detect colon cancer at much earlier stage by doing a genomic analysis of a stool sample.
Wow. Wow.
Very powerful. And then on the precision medicine, you have to think about the gene editing technology and the so-called CRISPR stocks,
Yes.
where you have 3 public companies here in the US that play around that.
Okay, so that was 3 right there, right? Was that 3 out of 9? What are some of the other fields that it's being revolutionized here in healthcare?
So we mentioned robotics.
Yeah.
Robotics is interesting because even though Da Vinci and the Da Vinci robots have been around for a long time now, we are only scratching the surface. They are used primarily in 2 types of operations: the prostate surgery and the hysterectomy. But the potential for robotic surgery to be used in so many other types of procedures is enormous. We're starting to look at orthopedics, of course, and general surgery and even bariatrics. So the market can grow multiple times from here. The data and analytics, I think, is really interesting now that we're able to collect more patient data. We talked about the wearable sensors. That's one part of that. But you've got the clinical trial data. All these data being organized, you can deploy AI and detect patterns that scientists so far have been unable to pick up. And that means we're able to accelerate drug development. And you've probably heard about what's going on with the fight against COVID right now, where AI is used to help develop new drug or identify the drugs that are most likely to work against that virus. We're looking at telehealth. Telehealth has actually been the best performing sector over the past 12 months. We've seen the likes of Teladoc in the US or Ping An, Good Doctor in China. The stocks have been very, very strong as the pandemic is kickstarted the rush to use remote patient doctor visits.
Right. Yeah, it really is kind of crazy that with this pandemic, all of a sudden it's almost accelerated all this larger catalyst that was already was going to happen anyways, but with the teledoc, the telemedicine, all of a sudden now that seems a lot more attractive than before. The electronic medical records, it never seemed. I mean, when I started out after college in '97, I did glaucoma medical research, and everything's on paper, and it's like they're never going to change. Now they have a reason to change. You know, and so it really is interesting that you have this kind of outside crisis that's happening. That all of a sudden now everyone is starting to think that let's accelerate this revolution, so we're more protected and more prepared for the next time something comes around.
Yes, I think you're absolutely right. And the market is telling us that indeed we're likely to see a faster adoption of a number of those technologies. If you look at the performance of the ROBO ETF or the HTech ETF year to date, it's outperformed again global equities like it has over the past 3 years and 5 years. So even in the sell-off, we saw some outperformance, and I think that's because certain areas of robotics and AI are clearly seeing a step up in adoption as a result of this crisis. Think about what's happening with e-commerce. E-commerce is under a significant strain right now as everybody's ordering online. And so the demand for automation equipment around that is increasing. The grocery online retail market, which had remained kind of slow to take off, is really taken off. And so we're seeing stocks like Ocado in the UK doing really well. So that's the e-commerce logistics automation side. And obviously on the healthcare tech side, things like telehealth are seeing a step up in adoption that we think is permanent. Once people get a taste for it, they don't want go back to the old way.
No, that makes a lot of sense. So always keep an eye on large catalysts that could disrupt major industries. It can happen at any time, and so you always want to be prepared. Coming up next, Jeremie and I are going to discuss a few ideas that are centered around the robotics and AI world. Stay tuned. I'm here with Scott St. Clair, and Scott is one of the senior product coaches at MarketSmith. Now, Scott, we've both been doing this for a long time, and we know that investment research takes a lot of time. There's so many factors that you want to look into to try to figure out whether this is a stock to buy or not. Quarterly earnings, huge sales growth. Hey, are institutions buying it? The list goes on and on.
Yeah, it's a common question. I hear it all the time. I don't have time to do this work. So you don't have to spend that much time. If you have a tool like MarketSmith, we do a lot of that work for you. Right there on the chart, earnings, sales, group strength, institutional sponsorship, like you just mentioned.
Right.
It's all there in the chart, so it allows you to make a decision much easier.
Yeah, and the beauty is that we have in-house analysts that go through the SEC filings, they pull out those numbers, and they put it right on the MarketSmith chart, and all you have to do is analyze them.
Yeah, I couldn't imagine having to go to the SEC website and look at the income statement, et cetera. That sounds like a lot of work.
Yeah, and that would take hours and hours, and in that time, you can go through hundreds of stocks and find the best ones. So don't miss out on a big winner because you don't have enough time to research it. For more information, go to investors.com/podcast 2020.
We are back with Jeremie Capron on Investing with IBD, sponsored by MarketSmith. Okay, Jeremie, let's talk about a few ideas that are of companies that are doing really well and well positioned in this large robotics and AI trend. And the first one is Cognex, ticker symbol CGNX. This is one that we're familiar with. They went on a great run a few years ago. Walk us through what they do and why it's still an exciting idea to you.
Sure. So Cognex is a leader in computer vision, and computer vision is one of the fundamental enabling technologies for automated systems that we believe is the most promising from an investor's perspective.
Okay.
Computer vision, what is this? This is giving machines the ability to see. And this is something that we as humans take for granted, but it is astonishingly difficult to replicate in machines. So computer vision gives machines the ability to analyze and understand the content of digital images. And for decades, this had been a very difficult problem, and applications were extremely limited and prohibitively expensive because we lacked the computing power. And over the past decade, we've seen tremendous progress on that front. So today, the companies like Cognex have grown a computer vision market that we estimate is around $10 billion.
Wow.
And this is primarily around factory automation applications, where instead of having a human worker do the inspection work, you're going to use a camera powered by computer vision.
And so it's going through like a conveyor belt or something with a camera. It's analyzing the widget or whatever that's going through to make sure there's no defects on it. Is that what Cognex is providing there, or?
That's right. You can do quality inspection. You can do measurements, gauging, and increasingly those computer vision systems are deployed not only in manufacturing but also in logistics. So today, Cognex serves the best companies around the world: the BMWs, the Amazon, Apple, and so on. Yet the penetration rate of computer vision systems is still extremely low, and we have around the world more than 350 million manufacturing workers, of which more than 50 million do inspection work. And you can see at the likes of Foxconn, where the Apple devices are assembled, some task consist in simply observing a printed circuit board and making sure that the components are there or in the right place or the right component.
Yeah.
So this kind of thing we can automate with Cognex systems. And the growth has been tremendous. The business is run extremely well. It's essentially a fast-growing, high-quality business.
And why do you think that the adoption rate has not been quicker? Because Cognex went on a great run back 2016, 2017, because they were a big time leader in this whole space, and then it's just kind of taking its time. But that penetration rate, that kind of surprised me that it hasn't continued to accelerate. Is there a specific kind of reason for it, or is it just adoption, just a natural kind of adoption level for any technology?
So I think Cognex is on a long-term structural growth trajectory where the adoption across a multitude of applications is going to increase year in, year out.
Okay.
But there's also an element of cyclicality to their business and also spurts of adoption. And that's exactly what happened in 2015, 16, when suddenly, the electronics industry started using that. And in
Yeah.
addition, the e-commerce sector that started using computer vision to read barcodes instead of laser uh, technology. So you had that big bump. The good news is that we think Cognex is at another inflection point as they've started commercializing some AI-powered
Okay.
vision systems that should significantly expand the range of potential quality inspection applications. So we're likely to see another spurt like this.
Yeah, and they just reported earnings a couple of days ago. It looked like it had a really strong reaction to whatever they said on their conference call or their guidance. And so that was essentially probably what they were. That's what you were probably hearing, that they're at this a new inflection point to really take advantage of kind of the next leg up.
I think so.
So Cognex so when you look at the market Smith chart for Cognex, it is setting up. It is starting to come back on the radar. It's definitely one you want to take a look at and consider adding to your watch list. So let's go to the second stock that we're going to talk about, and this is ZBRA Technologies, ticker symbol ZBRA. And Jeremy, what do these guys do, and why do you like them?
ZBRA is the world leader in automatic identification and data capture. That sounds complicated, but it's not. It's basically tracking and tracing components or products or parts in supply chains.
Oh wow.
So think about barcodes. ZBRA provides barcode readers, barcode printers, RFID, and some software that goes around it. So basically, ZBRA provides some of the critical tools to improve supply chain efficiency and logistics efficiency. And that's over time been a great business. We think that the boom in e-commerce is going to continue to support demand for automation equipment coming from companies like ZBRA.
And yeah, and also in this case, they reported earnings a few days ago, had a nice big jump, and so it seems like they are getting set up to move higher. We've heard over the last few years about RFID, how that's going to really revolutionize everything. Is that trend continuing to grow and grow, or is there a new technology that's come out that's replacing the RFID kind of catalyst?
Yes, RFID has been talked up for a long time
Yeah.
and really hasn't grown into as large a market as many researchers thought it would be. And the main constraint here is cost. And we're seeing that across our investment portfolios. The key question is, when do you reach that cost level uh, where demand really inflects? And in
Right.
the case of RFID, we're not quite there yet. The cost of an RFID tag, is still several cents.
Okay.
And
Versus like a barcode is how much is that, a barcode?
that is virtually free.
Okay.
And then on the data side, the software and data management capabilities around the existing barcode infrastructure has progressed tremendously, and therefore the advantage of RFID is not being as significant. But it is a growing market. It is an attractive market, and ZBRA is on top of it.
Okay, excellent. And so yeah, Zebra, another one to keep an eye on. It's almost near new highs. It's only 5.9% off its 52-week high, and just got earnings out of the way too. So another one worth considering to add to your watch list. So the next stock that we have that we're going to talk about is Brooks Automation, BRKS. And these guys are another one that went on a great run back in 2016 and 2017. Jeremie, what's so exciting about this company?
Yes, and Irusha, before we talk about this third stock, I want to make sure it's not confusing. But as investors, we recommend to take exposure or to capitalize on these trends to use a basket of stocks rather than trying to bet on a handful of companies. This is important because there is enough exposure available in public markets to build a diversified portfolio of best-in-class companies, and that significantly improves your risk return profile. And that's what we try to achieve with the Robo and H-Tech ETFs. Now, of course, to build an index, you need great companies,
Right,
and
exactly.
Brooks is certainly one of them. Brooks is based in the U.S., and for many years they've been a leader in automating the semiconductor manufacturing with technologies around vacuum and cryo, extremely low temperature
Okay.
management. And that's been a great business because the semiconductor industry keeps growing and the complexity of chips increases, and that makes automating the manufacturing increasingly complex. So they've surfed on that for many years. But interestingly, a few years ago, they started deploying the same core technologies into a new market that is in the life science industry, where the cryo technology in particular is interesting in terms of the biosample management. So they've built via acquisition and organic growth a tremendous business around biosample management, the storage, the retrieval, and the management of biosamples. And the number of biosamples around the world is increasing exponentially because the nature of life science research is changing. We talked about genomics.
Yeah.
Genomics involve enormous amounts of samples, and they need to be managed automatically. So that's what Brook does. And in addition, about 18 months ago, they acquired a great business that is called GeneWiz, that is based in New Jersey and that does genomic analysis.
Oh, interesting. So, so with the cryogenics, they're taking the tissue samples, things like that, completely freezing them so they can preserve them, and now they're just collecting this archive of data points, and that they can go back and always kind of research. So they're providing kind of the capability for all these life sciences companies.
Yes, for life science companies, biotech, big and small, research at pharmaceutical companies, but also hospitals and the labs that need to manage those samples. So it's really interesting in terms of the diversity of the end markets that they can serve within that.
Yeah. Now, as you were talking about this, especially when you were talking about Cognex with the imaging and things like that, it made me think about the one time when I was in Chicago, I got to go to, and this is about Amazon Go. There, those Amazon Go stores where there's no one there, there's no cashier or anything, but the cameras are watching you. It's all automated. You use a barcode to tell that, hey, I'm an Amazon Prime member, and it watches you, sees what you pick up, and then you walk out and it charges you. Are you following any of the companies that providing the technology for Amazon to create any of those kind of storefronts there?
Yes, and you can be assured that what the likes of Cognex or ZBRA do is really enabling this type of fully automated retail store. So the way Amazon Go stores work is that they'll use a combination of machine vision
Uh-huh.
and geolocation indoor to track the movement of consumers and what they pick on the shelves. And that's, I think, is a great example of how the convergence of those various enabling technologies can create something entirely new and very powerful.
Yeah, no, it was. I don't know if you had a chance to experience that, but I felt weird walking out at the store without paying, and someone was just placing like napkins and stuff. There's one person in the store, And I told her goodbye. I was like, okay, I'm leaving now. I feel weird walking out with a bottle of water. It is wild, and that's kind of like that future thing that it's mind blowing. Much like with when you saw like the iPhone the first time, right? It's like, how is this possible? And so you always want to kind of keep an eye on these kind of larger concepts that are out there.
Yes, I
So
agree. I did experience that in New York. We've seen a number of Amazon Go stores pop up in recent months.
perfect. So there are a few ideas that are worth considering to add to your watch list, and definitely keep an eye out and take a look at ROBO Global's ETFs, because they're doing a great job at identifying some of these game-changing companies and putting in a nice basket for you to invest just in that basket. So thanks, Jeremie, for joining us today.
Thank you very much.
Next week, we will have Simon Erickson on the show. He is another great analyst, and he is the founder of 7investing.com. So that's it for this week on Investing with IBD. I'm Arusha Pierce, and thanks for listening.